Is the bottom in? That's the big question that everybody wants to know. That's coming up on 3 Minutes on Markets and Money. After a brutal beating in January, the S&P down almost 9%, the NASDAQ down almost 12%. Big rallies over the last couple of days, of course, trimming those losses rather dramatically. This morning, futures are pointing up, looking for a bit of follow through here as portfolio managers position for the month of February, first day of the month, of course. We are now triggering, of course, buy signals on really kind of across the board on these indexes on a money flow basis from very, very deep levels. That suggests that this rally does have room to continue here. Now, the big issue is, where do we allocate money? Over the last couple of days, that's really been in the growth trade. A lot of these tech stocks have been beaten up. Apple, Microsoft, Google, huge days in the market yesterday. That's really what's been lifting the NASDAQ particularly, but also the S&P. As those stocks begin to recover here, the thesis, of course, now is that, well, we may not be seeing as much inflation and the Fed may not be as aggressive. This is something we talked about last week. Now, Fed member Raphael Bostic came out yesterday saying, well, we may not need to hike 50 basis points after all in March, and we might be able to slow it down just a bit because of inflation. They're watching that closely. And of course, any sign we get a disinflationary spat in the economy, they're going to back off the gas pedal pretty quick. That's going to bode well for tech stocks in the short term. So again, if you're really long that hard asset inflation trade, may want to start looking at nibbling in here to some of the growth trade as well to balance out the portfolio just in case we begin to see that reversal. Let's run through a couple of the other major markets here, particularly small caps and mid caps. Let's start with the small cap index. Small caps, of course, are much more sensitive to overall economic growth. They don't have the ability to buy back shares like big major market cap companies can. And of course, small caps have been under a tremendous amount of pressure. Now, they have gotten a nice little bounce here over the last couple of days, but underperformance of small caps and mid caps on a longer term basis really continues to underperform the large cap domestic stocks in particular. But as with the other indexes, we are starting to trigger a very deviated money flow signal here at low levels that does suggest there's more of a rally to come in small caps here in the midterm. Let's take a look at mid caps. Not surprisingly, small caps and mid caps looked a lot like each other. Again, same type of attitude here, seeing mid caps rally over the last couple of days, triggering a money flow buy signal. Suggests that, again, like with small caps, we could see a rally. Mid caps, though, like small caps, also don't have that ability to do a lot of stock buybacks here and are more susceptible to slower rates of economic growth impacting their sales and revenue. So keep a watch on that. I would still be a little bit cautious about those two sectors outside of a reflexive bounce relative to the rest of the markets. Now let's jump over to the international side of the ledger. Like the S&P and NASDAQ, international stocks have been under a bit of pressure. Now, international stocks have been underperformers really over the last decade. They have underperformed domestic stocks. But currently right now, their performance has been a little bit better, only in the fact that they didn't decline as much as the S&P and the NASDAQ. But we are seeing a little bit of a bounce here, triggering a money flow buy signal. Same thing that we're going to see on the emerging market side as well. Emerging markets also, not surprisingly, under a lot of pressure here, particularly over the last couple of months as this inflationary surge has come in, particularly when it comes to emerging markets. Watch the dollar here. A breakout in the dollar will not bode well for emerging market stocks, but importantly, emerging markets are not yet on a buy signal and are pushing up into resistance now. Again, they also performed a little bit better than we saw with domestic stocks, only the fact that they didn't decline as much during January, but they've been on a decline here for the last several months. So this still tends to be an area we avoid just because of the regular underperformance that would impact portfolios. But again, we are watching the international sectors. The big concern there, slower rates of inflation, slower rates of economic growth, and a stronger dollar are not good for emerging market companies, which are dependent on exportation, particularly of commodity-based products. And speaking about volatility, let's take a look at the volatility index. Of course, if you're going to have a bear market, you need a spike in volatility. That's exactly what we saw, but that volatility spike is now quickly evaporating here. Volatility is falling here. That suggests that this kind of risk-on trade is back in the markets. Again, when we kind of put all these things together, it does look like we have seen the bottom of the recent sell-off here, at least for the next couple of months. Again, that will allow the markets to recover. Could we see new highs in the markets? Possibly, but that's a long way to go here, a lot of work. So again, a lot of things are going to happen between now and March with the Fed, so pay attention to what the Fed says. I suspect we're going to start to see a peak of inflationary pressures and weaker economic growth here over the next couple of months, which will allow the Fed to back off. And again, that's going to cause this rotation trade potentially between this hard asset commodity trade and back into the growth trade itself. So again, too early to be making bets right now, but something to watch. And again, use this rally that we're having currently to rebalance risk in your portfolios, rebalance and reposition. And again, as we kind of get through what's going to happen over the next couple of months, we'll start making longer term predictions from there. But we got to get through this cycle first and foremost. I'm your host, Lance Roberts, for 3 Minutes of Markets and Money. See you next time.